Alright, so let's talk about the Great Economic Reset and why everything's becoming unaffordable. In other words, Inflation. Inflation is getting out of control, and just last week the numbers were released and we are at 6.8% inflation, which is the highest that it's been since the year 1982. So an entire generation's worth. So if you're ever out and about and you're shopping and you're wondering, why is everything becoming so expensive? It's not just you, it's happening all around the world. So in today's video, I want to make sense of what's going on, where we're going, if this thing's going to be a problem next year, and what we as consumers and investors can do about it. But first, we have to ask ourselves the question, why is this conversation happening in the first place? The reason that it's happening is because last Friday, the BLS, the Bureau of Labor Statistics, just released the CPI, the Consumer Price Index, and it's worse than we originally thought. Here's what CNBC said about it. While virtually every economist expects inflation to stay high for the foreseeable future, some had worried that inflation could have leaped as high as 7%. But thank goodness it wasn't 7%, it was only 6.8. We are 0.2% away from 7, which is basically a rounding error at this point. We are at 7% inflation, so let me share with you some of the data and then I'll try to make sense of it. Let's get into it. Hi, my name is Andrei, Jikh. Hope you're doing well. Come for the finance and stay for inflation. I just wish my YouTube channel grew as fast as inflation did. I'm just kidding. I stole that joke from Sarah Dietschy. So let's get right into it. The Consumer Price Index, the CPI, which is the thing that the Bureau of Labor Statistics uses to measure how much things have gotten more expensive, is up 6.8% this month. And again, that means it's the highest increase since June of 1982. But the biggest problem is that stores like Dollar Tree are gonna have to rebrand themselves to $1.25 Tree. And I wish I was joking because they are actually increasing prices to $1.25. So here are just some of the biggest changes to consumer goods right now. The first one is food, which overall went up by 0.8%, which is the biggest change in the last 13 years since the year 2008. Then we have the energy index, which is up 3.5% in November after being up 4.8% in October. Then the gasoline index went up by 6.1% in November after being up another massive 6.1% in October. Then we have the cost of electricity, which went up by 0.3% in November after being up 1.8% in October. Then we have the cost of natural gas, which went up by 0.6% in November after being up again a massive 6.6% in October. That was a lot to memorize, but the biggest price changes in the last 12 months is as follows. New cars, for example, are up 11%. Furniture is up 12%. Transportation is up 21%. Hotels are up 22%. Used cars are up 31%. And rental cars are up 37%. And gasoline is up 58%. So prices at the end of this year are a lot higher than where they were at the beginning of this year. So I know that videos about inflation can sometimes get political, which is not the point of this video, but I do want to address comments that say, how did you think these companies were going to pay for those wage increases? And I can follow that logic, and that's partially true, but that's not the whole truth, and here's why. No one wants inflation in this country. That's not up for debate. There's not a single politician in office who's sitting there like, ooh, I'm going to plot to increase inflation and spice up the economy. Inflation is just a byproduct of the stimulus programs we've created to keep the economy running, because if we let the free market do its thing, that could potentially crash the economy, which some people argue is far worse. What that's done, though, is it's created what's called a tight labor market, which basically means that people now are getting paid more than they ever have before. In fact, if you look at your own income right now, you're probably making more money today than you were before the pandemic started. What this means is that companies are forced to pay their employees more, which means their costs increase, which means they have to pass on their cost by increasing the prices of goods and services to their consumers. That makes sense. Now, some of the luckier companies, like some of the bigger ones like Walmart, their costs have been offset by their sales growth. But not every company could say that. And so another reason why companies have increased their prices is because there is now more money. This is gonna blow your mind, but according to the NASDAQ, since the beginning of the pandemic, which is March of 2020, we have created something like $13 trillion. That's 5.2 for the Roni Rona, 4.5 for quantitative easing, which is the money printer go prrr, and another 3 for infrastructure. That is roughly $13 trillion. Now, just for context, World War II cost us only $4.7 trillion by today's standards. Not to mention the fact that supply chains are still not cleared, we're still not shipping things on time, and interest rates are still relatively low, which means we're encouraged to borrow more money so we can try to grow faster than inflation, but that also means we're inflating the monetary supply, which means we are left competing with each other over the same stuff that's left. So of course prices are gonna have to go up. Now you might be wondering, well, at least my income's going up too. And that's partially true because remember, inflation affects everything, not just consumer prices, but how much money we make. So the Labor Department reported that from October to November this year, the average hourly earnings increased by 0.3%, which is awesome, until you realize it's not awesome because inflation increased 0.8%. So even though wages have gone up, the real growth is negative 0.4%. So that's the situation we find ourselves in, and the question we have to ask is, how long is this gonna last? Will this continue into 2022, and what can we do to fix it? Now this is gonna shock you, but our government is divided on what is responsible for inflation and how to actually fix it. For example, President Joe Biden thinks that we're going through the worst of inflation right now, and it's only gonna get better from here, and his plan to bring the costs down is his Build Back Better plan, which proposes to spend $1.75 trillion over the next 10 years to bring those costs down. The way he wants to fund this plan is to increase taxes on the rich, and what this plan proposes is to fund care for senior citizens, people with disabilities. It wants to invest in clean energy, expand Medicare coverage, give tax breaks to families, and subsidies to childcare. He basically says that while it's true that we're paying more for rent, for food, and gas, that as soon as his bill passes, that hopefully we'll also pay less in things like childcare and healthcare and utilities and education. His goal is to have middle-class families keep more money for themselves. But here's the problem. Depending on where you get your information from, some people are said to be happier than others. For example, MSNBC reported that according to data for progress.org, roughly 61% of voters are happy with President Joe Biden's plan because they think inflation is temporarily caused by problems like supply chains, which will eventually clear up, while the other 39% are like, the government's just spending way too much money, right? Now, according to the Democrats, they say that this bill will cost roughly $231 billion in budget deficit. Remember, the budget deficit is just how much money the country is spending in relation to how much it's making. But if you get your information from other sources like Fox News, they're more pessimistic and they say that this is just asking for inflation because the true cost of this bill would be closer to $3 trillion in budget deficit if these programs are made permanent. Those socialists. So the question is, who do we believe? And that's a hard question to answer because I think we all want what's best for the country, we just disagree on how to get there. So the truth about inflation is probably somewhere in the middle. If this bill passes and becomes law, the truth is inflation will probably go higher in the short term. It just has to because we're spending more money and that's how people are gonna perceive it. But in the long term, it should help us out. Now, I tried to do more research and find people that are smarter than me who could back this plan, and it just so happens that there are 17 laureate Nobel Prize winning economists who wrote an open letter to support Joe Biden's plan. And this letter, or at least the last sentence of that letter, is something President Joe Biden uses to be like, 17 guys that are way smarter than me are backing me up on this. Guys, it's gonna work. And here's what that last sentence says. Because this agenda invests in long-term economic capacity and will enhance the ability of more Americans to participate productively in the economy, it will ease long-term inflationary pressures. In so many words, it means in the long term, it should help us out. By the way, if you're confused what a laureate Nobel Prize winning economist is, it is someone who has conferred the greatest benefit to mankind. So it's a pretty big deal if 17 of those guys got together and agreed on something. Sir, do you concur with my assessment of the economic structure? Why, indubitably, my conjecture leads me to the same conclusion. So we agree? Vis-a-vis. Won't you be a dear lad and smash that like button for the YouTube algorithm? My lady, my lord. They probably don't talk like that. That's just how I imagine it happened. So while our government is arguing with each other about inflation, our main man, Jerome Powell, is stuck in the middle of all of it. And out of everyone in the economy right now, he's faced with the hardest decision of all. And here's what it is. This is gonna get a little complicated, so I'll try to break it down as simple as I can as if I were to explain it to someone who was 5. So Jerome Powell, that's this guy, the chairman of the Federal Reserve, the guy in charge of the central bank, is sort of like the main character in this storyline, and his job is to defeat the evil that is inflation. And it just so happens that Papa Powell has the weapon to defeat the evil and beat the game, but if he uses it, he could also substantially hurt us and end the game. So it's like a double-edged sword, and here's what I mean. His job right now is to figure out how to lower the price of stuff without hurting the growth that we've had. And we've had a lot of it, right? Especially in the stock market, in real estate, and in crypto, but we've had it in consumer prices too. And so inflation is somewhat of a necessary evil if we want to continue growing, because someone has to eventually pay the price, whether that's now or further down the line. That someone is gonna have to be us, right? Especially for the people that are not invested in the markets, they're gonna pay the ultimate price. So that's why we want slow, controlled growth. And here is how Jerome Powell can control that growth. He can increase interest rates to cool down what's called the corporate debt. Because interest rates have been so low, companies have been encouraged to borrow cheap money so they can finance their growth. But this could contribute to inflation. In fact, because of the inflation report of 6.8%, people from both political sides of the aisle are pressuring him to do something about it. They're like, come on, Papa Powell, give me a high potion over here. Give me a Phoenix down and fix this inflation. But this is a problem because if he does that, he risks destabilizing the economy because companies are sensitive to interest rate adjustments, because if he increases them, then stocks go down in value. And you don't have to be very smart to figure out that nobody wants to be the guy that's responsible for potentially crashing the economy. So his first line of defense, which is what he's doing literally right now, is to decrease asset purchases like the treasury bonds and the mortgage-backed securities. That's his first line of attack against inflation. And if that still doesn't help inflation and it still continues to go up, then he'll be forced to increase those rates. But he's still stuck between a rock and a hard place. The worry is that companies that have borrowed money could be pushed to the brink of bankruptcy because they might be forced to pay the same loan, but now they're paying more money for it. Almost like imagine someone who just bought a house with a 5-to-1 ARM, an adjustable rate mortgage. Sure, they might have locked in a really low interest rate for those first 5 years, but then they realized that Papa Powell increased the rate, and so when their 5-year period expires, they may find themselves paying for the same house, the same loan, a way higher monthly payment that they may not be able to afford. If that made no sense, just imagine it like this. I borrowed too much money, Grandpa. Well, that's too darn bad. That's why Jerome Powell has to be very careful and slow about how he increases those rates. It's almost like he has to bring the economy down to a perfect sizzle, and if he turns that knob too fast and too high, it could set the whole thing on fire. And by that I mean if it's too expensive to borrow money, or if the requirements to borrow it are so much higher, it could potentially create a credit or liquidity crunch, which would put a huge deflationary pressure on the economy, and deflationary means, it means bad. So I hope that explains what's going on. And if you're still on the sidelines wondering, should I buy, should I sell, should I wait? Here's what I'm doing, so you should do the exact opposite. I'm not gonna do anything differently. I'm gonna continue to dollar cost average into the market because I have no idea what's gonna happen. Next year, we could find out that inflation is still high because supply chains have still not cleared up. Or maybe we could find out that Jerome Powell overcorrected interest rates, which tanked the economy, and then he's like, JK, and he lowers them again, and then we go back up again. It's like a roller coaster ride, and no one has any idea where it's going, so just sit back and enjoy the ride. But if you're looking to buy a house, then I think the answer is a little more complicated, because the general advice you're gonna get is borrow money now while interest rates are low. And that's generally good advice, except the risk is that you have no idea where the market's going. And good debt is only good if you can guarantee that you can pay it back. And for me, I have no guarantees that my job won't disappear or that my income won't go lower because Jerome Powell overcorrected those interest rates and companies were forced to downsize because they have to borrow money and that money is expensive. No one has any idea. If I knew the answer to that question, and if I knew that hyperinflation was going to be a thing next year, I would go out right now and borrow millions of dollars and buy up hard assets. But I have no idea because no one has a crystal ball. So for now, slow and steady as she goes. As always, don't forget to have a wonderful day, smash that like button, subscribe if you haven't already, go get up to $250 worth of free Bitcoin with this BlockFi link right here, blockfi.com/Andrei. Go get your 2 free stocks with Webull, links down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'll see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon, bye-bye. Welcome to Sweat Talk, the place where you help them sweat and stay in the talk.
Yeah, man, I'm ready to get sweaty.
So scared.
I'm still scared.
berdesak.
Bro, where